Hello, traders. Gary Wagner with the Silver Forecast. Approximately 11 a.m. in Honolulu, Hawaii, Thursday, the 10th day of March, and this is the Daily Report. We did get the significant break that we were looking for in the silver market. Silver is currently trading off almost $1, 35.21. We are looking at a 120-minute candlestick chart, and you can see the activity. This is from the 9th through the 10th right in here. And of course, the top that we saw is fairly significant, and we will look at it in a couple of different manners, all here on today's Daily Report. This is our daily chart candlestick format also, in which we have been viewing our Andrews Pitchfork. What we talked about actually on Monday, the very first day, the premiere of this broadcast, was the fact that when we looked at this extension, this upper extension, what we noticed on Monday was the fact that we felt we had some real resistance kind of come into the market, but we also felt it was too early to tell. Over the last couple of days, although citing significant resistance, I believed it was a little bit too early to tell if in fact that would form a top. Well, there's absolutely no question right now. We did form a top in this area. The market has traded lower. And as you will see in our Elliott wave and most importantly, our Fibonacci retracement chart, what you will see is it's come to a very predictable area. And it's an area that I'm comfortable looking at in terms of entry into a long position. Traders, we are looking at a weekly Henkin chart with Elliott wave, but more importantly with Fibonacci retracement. What I want to pay particular attention to this morning is this retracement that we drew from this last rally, from the bottom here all the way up to this 31-year high that what we hit when the market breached $36 per ounce. Now, I talked about two significant areas: the 23% level and the 38% level. These are charts that you have been looking at throughout the week. Now, traders, what we see at this point is that, at least on a tentative basis, we have found some significant support in this area. And the thing that makes me take a double look at it is this is really the point which we felt comfortable in terms of where we thought the market could actually go to. And you can see there's real good support right here in that 38% retracement area. Now, I absolutely want the marketplace itself to find some support. If you recall, this is a daily Henkin chart, and this is also the Henkin chart we used on Monday and Tuesday, in which we drew what is known simply as Fibonacci extension points. Again, in terms of the extension, it is very similar to retracement, except we're moving up from the point that we're drawing, meaning that if this is the top, we then extend our levels up as opposed to down when we typically would look at a retracement. Now, once again, that 61% came precisely within a dime or so, I should say, to that top. And that's why Monday and Tuesday, my sentiment as we were looking at these charts were that I really believed that there was some strong potential for there to be some sort of correction in this area. Again, it's a little bit too early to tell in terms of our entry level, but I am absolutely comfortable at certain areas. And the one thing that I believe is that $35 should hold as basic support. If in fact we see the market holding support and we get any kind of a buy signal that's candlestick based, in which we will look at tomorrow, because we already have, in terms of this chart right in here, a hammer forming. So we could certainly get confirmation of that. But we have a multitude of factors right now that are telling us that this, in fact, could be the dip we've been waiting for to enter the market. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for the Silver Forecast's first weekly review. It's been a pleasure and an honor doing the report for you this week. Bye-bye.